Good afternoon and welcome back everyone to our options education webinar series. My name is Tony Zhang. I'm the chief strategist here at OptionsPlay. And today we're going to be talking about how to generate consistent weekly income utilizing options. We're going to be covering the most popular option strategies, best practices for trading these types of option strategies, and more importantly, showing you the tools that you have available to you at StockCharts.com that help you identify the highest yielding income opportunities across any list of securities. Specifically, we'll look at bullish and bearish securities and how to generate income across all of them and how to find the highest yielding opportunities using the tools that are available to you here at StockCharts.com. Now, before we get started, what we are going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any of the specific securities that we'll be using as example purposes during today's session. Now, my goal today is simply to help you review the top income strategies, top income option strategies, and how to maximize your income for each one with weekly income for StockCharts.com. We're going to go over theory. We're going to understand the mechanics of each strategy and how they generate potential gains for your portfolio. We'll also talk about best practices, but most importantly, what we want to do is spend the time showing you the tools that are available to you at StockCharts.com that automate the screening and the searching for these types of income opportunities that we're going to be going over, so that you are always finding the top performing option strategies on the stocks that matter to you, whether they're stocks that are pre-screened using StockCharts.com, or you've built your own screens in StockCharts.com, how you can find maximum yield on those stocks every single day in real time for weekly income, for monthly income, for quarterly income, whatever preference you have in terms of frequency that you're trading options on. Our tools can help customize it and find real-time high-yielding opportunities for you. So what I'm going to walk you through today is the way that you can use the tools to find these real-time personalized income strategies so that you are always finding the best possible opportunities for the stocks that you care about. So before we kind of jump into it, I just want to show everyone that the tools that I'll be talking to you today is only available as an add-on to your StockCharts.com membership. It is only $40 a month. It's going to include the seamless integration with StockCharts.com and all the tools that you have. And I'm going to show you how it integrates with StockCharts and the screening capabilities that you have, so that as you run screens in StockCharts.com, you'll be able to identify in real time the best option strategies on those specific stocks that you're using StockCharts.com to screen for, and then personalize those option strategies to the strategies that we're going to teach you today. So we're going to look at income strategies that go from beginner to advanced, and how you can personalize each one and have them all ranked for you at your fingertips, so that you can save tons of time every single day in finding the highest yielding opportunities from an income trading perspective at your fingertips in real time. And this is all available to you for just $40 a month. If you want, you can point your phone to the QR code to see the page on how to subscribe for this tool. But I want to show you today how on the first trade that you make with this tool, you can cover the cost of at least 1 month of your membership, if not 2 to 3 months or more of your membership, with just your first income trade using these tools. So what we'll do is we'll kind of go over the gamut of option strategies from beginner to advanced, starting with simple strategies like cover calls and cash secured puts. I'll do a quick overview of these strategies. I'm going to assume that most traders here at least have a basic understanding of some of these strategies. If we get to a stage where we are talking about option strategies that are beyond your knowledge level, that's okay. We're going to try to walk you through it, like I said, from beginner to advanced. But what you want to focus on is kind of where you are today. Whether you're a complete beginner and you're going to start with something like a cover call or a cash secured put, well, the idea is to stay where you feel comfortable. I'm going to show you how to use the tool specifically for those specific strategies. And if you have a little bit more experience, you're going to be able to take advantage of more strategies from today's session. But no need to push beyond where you're comfortable. Stay where you are currently knowledgeable with. That's my advice to you. And no matter how beginner or advanced you are, you should be able to walk away from today's session understanding how you can cover the cost of at least 1 month, if not multiple months of your membership from just your first trade without taking on additional risk in your portfolio. Okay, so we'll start with cover calls. It's a strategy that you can utilize as long as you own at least 100 shares of an optionable stock or ETF in your portfolio. You own 100 shares of Apple, you own 100 shares of Netflix, you own 100 shares of any stock that has that is optionable, or ETF that's optionable, such as SPY, QQQ, IWM, any of these ETFs that have options trading on them. You can write calls against the stock that you own and collect income. And what happens is when you sell a call option, you collect income from selling that call, and that income comes with the obligation to sell the stock at a specific price in the future if the stock rises to that strike price by that expiration date. And I think one of the ways to think about this, if this is completely new to you, is to think of this as almost like a limit order. Because if you own stock, you can sell that stock sometime in the future for a higher price if you place a limit order. The downside to a limit order is that you don't get paid to place that limit order. But when you sell a call option, you have the same obligations as the limit order, meaning you're obligated to sell the stock if the stock rises to that price. But when you sell a call option, you get paid income. And that income is incredibly helpful to augmenting the returns on your portfolio. And a lot of people are quite surprised at how much income they can generate from this simple strategy. Okay. The second strategy, and this is what I consider the most underutilized option strategy in most investors' toolkits, is a cash secured put. Because when you want to invest in a stock, let's say you want to buy Apple or Meta or Nvidia or any stock that you want to buy, as long as you're wanting to buy 100 shares of that stock, you can typically place a limit order to buy the stock at a specific price. Most people don't think of, what if instead of placing a limit order to buy the stock at $100, what if I sold a put option at $100? Well, when you sell a put option, just like placing a limit order, you have the same obligations as a limit order, meaning if the stock drops below your price, you are obligated to buy the number of shares or of the stock at that specific price. That's what selling a put obligates you to do. But the difference between a limit order and a put is that a put pays you income. And this is the most surprising part as far as what most people don't realize, how much income they can potentially generate from selling a put option to acquire the stock that they want to buy versus just placing a limit order. So before we move on, I want to walk you through these two examples with some real examples to show you how much potential income you have to gain from these two strategies. Okay. And then I'll show you also how to potentially change this for varying degrees of frequency that different traders have preferences for when you're trading options. So what I'm going to show you here is available to you under the options tool section of your StockCharts account. And if you go to the OptionsPlay Strategy Center, this is for those of you that are currently subscribers. You'll see this tool. If you're not a subscriber, you'll get that screen that I'm talking about to pay $40 a month. And you can kind of sit through this presentation, see if you think this is worth it. Like I said, what I want to show you is how you can easily generate that $40 a month from that first trade using this tool. Okay. So, the reason that I created this tool in conjunction with a partnership for StockCharts.com is because the the typical experience that you have as an options trader starts with a page that looks like this. So let's say I'm looking at, let's look at a stock instead. Let's look at Netflix, for example. Netflix has been in the news. They're trying to acquire Warner Brothers. Maybe you think that the stock is sold off now and it's maybe a time to buy it. So let's say you're considering some of these strategies I'm talking about. Well, you're faced with a page that looks like this. It's got hundreds of strike prices on it. And even within that, there are dozens of expiration dates that you can choose. So you have to choose a strategy, you have to pick an expiration date, and you have to pick a strike price. And there are thousands, tens of thousands of choices to choose from, which makes it simply overwhelming for your average person to get started. Even for someone like myself, who's been doing this for 16 plus years, it's daunting to face a page that looks like this to figure out where you should trade. And more importantly, even if you have a good sense for how to navigate a page like this, such as myself, who's been trading for a long time, I know that, okay, I might want to go out to maybe 30 days out, and I will look at using Delta to choose my strike price. Maybe I'll choose a $95 strike price to sell a put option on Netflix. Only after I've made all those choices can I see things like risk to reward information or yield information. So I have to make a lot of choices before I can even see basic analytics. And then what I have to do is look at the analytics, go back to this page, maybe select a few different other choices, see what the analytics looks like for those choices, and then kind of in my head remember all the different choices that I've chosen to figure out which ones I want to trade. It's a broken experience. No one in the right mind wants to do that day in and day out as an options trader, and it is rife for making mistakes, which is why we built this tool to automate all of these steps for you, give you all the analytics that you need in one page, ranked from top to bottom, so that you can make the best choices when you are trading these types of strategies. So what I'm going to first show you is as a StockCharts.com user, you have access to our pre-built technical screening ideas on a daily basis. We have bullish ideas, bearish ideas, and we have trend following ideas, counter trend ideas, and outperformance and underperformance ideas. And we're 100% transparent as far as how we come up with these ideas, but they're pretty self-explanatory. Either you like following a trend or you like to trade counter trend. We tend to find that most traders, from a personality perspective, falls into one of those two categories. So you can choose which ones you want to take a look at, or you might just want to say which stocks are outperforming the market, which stocks are underperforming the market. I like to get a sense for what's really moving in this market. And then the other thing that you can do is in stock charts, you can create your own chart list. Not only can you create your own chart list, you can also build scans that populate a chart list every single day. And that's what I do. I build a lot of different custom scans using all of the different scanning capabilities that I have at StockCharts.com. And I have them populate new watch lists every single day. So every single day when I pull up a watch list, I know I'm getting the most recent scans for that specific day. So I encourage for anyone who has a StockCharts.com membership to really explore those tools, because that's when you're going to be able to get maximum use out of the OptionsPlay add-on. But let's start with just the baseline of what you get if you don't do any of those pre-built scans. I'm sorry, if you don't build any of your own scans, you just want to use our pre-built scans. I want to show you what you can do. So let's take a look at the bullish counter trend stocks, meaning these are stocks that are currently in a bearish trend that are starting to reverse potentially to a bullish trend. What we're trying to do is catch them at the very early turning point from bearish to bullish. Okay. Does that make sense, everyone? Please type 1 into the chat window if that makes sense to you. We're just trying to identify stocks that are so bearish that they are potentially pivoting back to a bullish trend. We want to get in as early as possible, right? So when we talk about, we all know the old adage, buy low, sell high, right? That's what everyone's trying to do when they're investing in stocks. But how do you buy low? You have to buy low when everyone else is selling and no one else wants to buy. So that's what we're trying to identify with these counter trend moves. Okay. So if you pull the bullish counter trend list, you'll see today we have 23 names that fall into that particular category. So let's say that we want to sell a short put on that list of stocks. So, we all maybe conceptually understand what a short put is as a strategy. But how do you know you're generating maximum income? That's the big question, right? Because, okay, great. I've identified a stock that I want to sell a put on, and I found a put. But how do I know I'm generating the most yield? Well, that's what the OptionsPlay tool is designed to do, so that you can choose a list of securities. In this particular case, I'm choosing a pre-built list from OptionsPlay, and I'm choosing the short put strategy. Now, once you choose those two inputs, everything else will pre-populate for you based on default parameters, meaning you don't have to have any more options experience in order to start getting some results. So let's just go with the default parameters for now. Let's not do any further customization, assuming that you're kind of brand new to options trading and you're just getting started. Let's take a look at what that looks like. So now what I have is, out of the 23 names, there are about a dozen or so that have valid strategies. So these are specifically 30-day aggressive short puts where my maximum risk is no more than $50,000. I'll talk about that here in 1 second. And then what it does is it ranks each of these stocks based on how much yield I'm going to collect selling that short put. So Tilray, which is a cannabis stock, those are notoriously volatile, is at the top of the list, which is not surprising. But just so you can see, I'm going to collect nearly 15% of the stock's value in just 30 days in selling that put option. Just think about that for 1 second, right? Think about stocks that pay a nice dividend. We usually think about stocks that pay maybe 4 to 5% as a good dividend, right? That's a high dividend paying stock. There are obviously some that are much higher, but those are also much riskier, right? So we usually think of 4 or 5% as like a high dividend paying stock. So that's 4 to 5% per year that those stocks are paying. Put that into context here. This stock, by selling the put option, is earning you close to 15% in 30 days. If you annualize that out, which, that's projection, right? But if you analyze that out, that comes out to be roughly 387% yield per year if you were doing that month after month for the whole year. Now, I'm not advocating anyone go out and buy marijuana stocks, but that just shows you where you're going to maximize your yield. That doesn't mean that that's what you're going to choose, right? You might want to look at this list and say, which one of these stocks am I actually comfortable buying, right? You would never touch a marijuana stock, so maybe you move on. But the idea is that every single list, instead of just giving you 23 random names that you have to go through each one by one, it ranks it for you from top to bottom where you're going to get the most yield. And what you want to do is you want to go down the list and find stocks that you feel comfortable potentially buying. So I'm just looking at this list here real quick. And the first one that kind of pops up is one that we just spoke about before, which is Netflix, right? Let's just take a quick look here at Netflix. I'm just pulling up a chart here. And as you can see, Netflix, this stock was a $125 stock a couple of months ago. That's now traded down to 96. So the stock is, from a technical perspective, oversold by most measures and could potentially be a bit of a bounce candidate, especially if this hostile takeover from this alternative group maybe goes through and Netflix no longer buys Warner Brothers and the stock recovers from the recent sell-off, because investors aren't particularly happy that they're about to spend $72 billion to acquire Warner Brothers, right? So if that deal falls through, you're likely going to see a bit of a pop here in this particular stock. So you just have a few things going around for this. And look, Netflix, if you sold the put option here, if you sold that January $93 strike price, you're going to collect 2.5% of the stock's value in 30 days. So Netflix obviously doesn't pay a dividend, right? So it's not an income paying stock, but even if a stock paid a 2.5% dividend per year, that wouldn't be a bad dividend. That would be a pretty slightly above average in terms of dividend yield. But this is paying 2.5% in 30 days. That annualizes out to 32%, nearly 33% yield for the whole year if you were doing the strategy. Now, you wouldn't sell puts, the whole year, but it just gives you a way to measure roughly what the annualized yield is, so you can compare different timeframes, apples to apples. This way, if I were to sell this Netflix one, I'm earning 32% yield annualized. Most people don't realize how much yield there is in this strategy versus outright buying the stock. So imagine, the stock's trading at 96. Imagine if you put an order to buy 100 shares of this stock at $93 using a limit order, you would get paid zero. Versus if you had used a cash secured put, you would be earning $225 for every contract, which is the equivalent of 100 shares. So a $96 stock requires $9,600 in cash to buy 100 shares of that stock. You're going to get $225 back in income out of that $9,600, which is how we calculate that 2.5%. So imagine if you can get roughly a 2.5% discount on every time you buy a stock instead of placing a limit order using that short put. This is how we can help you maximize your yield potential on the stocks that you want to purchase. And chances are you're not going to want to purchase every single stock on this list, but chances are on some of this list, you'll find 1 or 2 or 3 stocks that you feel comfortable that, hey, this is a stock that I would be a buyer in this right now. And instead of placing a limit order, selling a put option can generate, in this particular case, $225 to buy that stock. And what that means is that you are now taking $225 of less risk than if you place that limit order. A lot of people think of selling puts or these option strategies as risky, but if you actually compare, okay, if instead of placing a limit order to buy the stock at 93, if I sold the $93 put, I'm taking $225 of less risk selling the put than I am buying the stock. Well, that becomes a bit of a no-brainer as far as which one of those two you want to choose from a risk perspective, right? Because selling the put is actually less risk than if you just bought the stock using a limit order because of the income you collect. Does that make sense, everyone? Please type 2 into the chat window if that makes sense to you. And this becomes incredibly powerful if you start running your own screeners for stocks that you like to buy, right? So I run different screeners. So for example, I have the screener here that I have built into StockCharts that, I screen for different technical requirements that I need for stocks that I want to buy. So if I do the same thing here for short puts on stocks that I care about, then I truly can basically pick the ones that are at the top of the list because every single stock on this list meets my requirements for stocks that I want to buy. So Lululemon right now is really interesting. They report earnings on Thursday. But I can collect nearly 6.5% of the stock's value in 30 days selling this put option. And if you look at the stock here, the stock has taken a huge beating this year, but maybe starting to turn around here, right? This is what I'm looking for, are these turnaround opportunities. Stocks that have maybe potentially bottomed, starting to show a little bit of strength here. Maybe earnings is what carries this higher here. Instead of just buying the stock outright, if I sold the put option here, I can collect $1,000 in income, roughly on the $18,000 that I would have to buy 100 shares of. I'm gonna get $1,000 back selling the put option versus placing that limit order to buy the stock. So that $1,000 that I'm saving is reducing my risk by a little over 6% on the stock's value. I'm always going to take the opportunity to reduce my risk by $1,000, especially going into earnings, right? Anything can happen on earnings. I want to have $1,000 buffer on my purchase rather than not having it if I've just used a limit order. So this is really how I use this particular tool, where you can have really powerful screening capabilities where every single time you're looking at this, you know that you are finding the opportunities with the maximum income if these are types of strategies that you would trade. So you would use it on cash secured puts. You can use it on cover calls. So let's flip to cover calls real quick, right? Let's say this is a list of stocks that I own in my portfolio. Well, now let's switch over to cover calls. Let's see how much income I can generate on the stocks that I own. Let's say I own 100 shares of Strategy. Stock's currently trading at 196. This is telling me to sell a 275 strike price, which gives me a lot of room to the upside, right? So basically, if the stock, can rally another $80 before the stock gets called away, but I'm going to earn $395 from selling one call option against my stock position. So think about it, right? The cost of this subscription is $40 a month. You're going to earn $400 on strategy alone from selling one cover call that lasts 45 days. So in the next 45 days, you'll collect enough income to pay for 10 months of this subscription. If let's say you had 100 shares of strategy, MicroStrategy, and probably a lot of you do, right? That's a very popular stock these days. If you have 100 shares of MicroStrategy, well, you can generate nearly $400 worth of income selling one cover call, putting the obligation to sell the stock at $275. So the stock has to rally $80 in the next 45 days before the stock gets called away. And if the stock rallies $80 in the next 45 days, that's not a bad result for you. You're going to be able to take a really nice profit on that stock in the next 45 days on top of the $400 that you're earning in terms of income, right? So if you can maintain a watch list of the stocks that you own in your portfolio, and this tool will always tell you which stock is going to generate the most yield from a cover call perspective so that you can work your way down. So if you own 100 shares of strategy, you're going to earn $400 per 100 shares. So if you have 1,000 shares, that's $4,000 in income, right? This $395 is per 100 shares. Let's say you own some Lululemon stock, or let's look for a lower price stock. Let's look at General Mills, right? Let's say you own 100 shares of General Mills. That's a $4,500 position. That still is going to generate you $38 worth of income for 45 days. That's going to cover 1 month of your subscription. So, as you can see, almost every single opportunity here generates more than $40 of income from just 100 shares of stock. So 100 shares of stock should generate for you at least $30, $40 in terms of income, if not substantially more than that. And that will pay for your single month's subscription for OptionsPlay so that you can get started, start taking a look at this, and start exploring, because a single trade can cover your subscription, okay? And with a cover call, remember, this is a strategy that does not add additional risk to your portfolio. When you sell a cover call, you are actually reducing risk in your portfolio. You're not adding an additional risk. Every other strategy that we're going to talk about today, selling cash secured puts, selling credit spreads, selling iron condors, it does add additional risk to your portfolio. You're taking on risk with those strategies. But with the cover call, you're not, which is why I feel comfortable telling you that you are going to generate income from your first trade to offset at least your first month's worth of income, first month subscription for OptionsPlay, because this is the only strategy that doesn't add additional risk to your portfolio. Okay. So, I wanted to show you how easily you can apply this tool for sort of the beginner income strategy, whether that's cover calls or cash secured puts. So cover calls are for stocks that you own. Cash secured puts are for stocks that you want to own. So generally speaking, I suggest that you maintain a watch list for stocks that you currently own, and perhaps a watch list or a screener for stocks that you want to own. And if you don't know, if you haven't built your own screeners in StockCharts yet, you can use our pre-built screeners at the top of the list. So whether you want to follow the trend, whether you want to trade counter trend, or if you want to just find stocks that are currently outperforming, you want to buy those stocks. However you want to choose your stocks, you can use either our pre-built scans to help you identify stocks that you want to buy, or if you're currently doing your own scanning capabilities, you will be able to pull that directly into the OptionsPlay Strategy Center as well. You choose your strategy, and if you want to customize it, so for example, I said if you want to generate weekly income, you can do that. You can choose shorter dated strategies so that you can generate weekly income instead of monthly income. And then when you click on update, it will update for you and reprice everything for you. So even Lululemon, you can generate nearly 4% in 1 week time from selling a Lululemon put. Now, like I said, Lululemon reports earnings this week, so that does juice up the income potential on these types of strategies. Adobe also, reports earnings. You can generate nearly 2.3%. Strategy, doesn't generate any, doesn't have earnings. Will generate 2.2% in 1 week. That's how much income you can generate on a single week. That's $410 for every 100 shares that you are obligated to purchase, right? So it takes $19,000 to buy 100 shares of MicroStrategy. Here, you're earning $410 per week to take on that obligation. So If you're thinking about buying MicroStrategy, instead of using a limit order, look at selling a cash secured put. For every week that you do it, you're going to reduce your cost basis by $410 for every 100 shares. Okay, so the next strategy we're going to look at is a vertical spread. A vertical spread is really just a short call or a short put. But if you don't own the stock, or if you don't want to own the stock, you can sell that same call or same put without taking on the unlimited risk nature of just selling a naked call or a naked put. So a good example of this is, let's go back to our buy list, right? Instead of selling a put option, which has substantial risk if the stock goes all the way down to zero, what you can do is you can do what's called the bull put spread. That's a credit spread. Now, many of you that are trading options or familiar with the option strategies should be familiar with a credit spread. And what this basically does is it tries to identify opportunities to generate as much risk, it generates credit spreads where the risk reward is as favorable as possible in your favor and ranks it top to bottom. So same thing, same list that we were looking at before, my buy list, or you can use one of our pre-built scanning lists, right? And what it does is it finds bull put spreads that have the best risk reward. So basically ranks it from best to worst. So what that means is that if you have a list of stocks that you like, right, you don't have to look through the options chains one by one, right? So normally you'd have a screener that you run. It'll tell you, okay, there are 29 stocks that meet your screening criteria. Well, now you have to go pull up 29 different options chains to see where there are options or option strategies that are favorable for you. Well, this tool automates that entire work for you in under 2 seconds. So if I'm looking at a buy list, I'll use the bull put spread because that's the bullish credit spread. And what it does is it basically ranks for me and tells me Lululemon is going to give me the best risk reward ratio. For every $1 I'm risking, for $1 I can potentially make, I'm risking $1.4 on the back of that, which is incredibly strong for a credit spread. There are a lot of credit spreads that people trade where they're risking $3 for every $1 they can potentially make, or upwards of $5, $7, even $10 that some people, which I'll be perfectly honest, I never understand why anyone would do that. But there are traders that do that because those trades have 95% win rates, right? But I'm not a believer in that and trading those types of strategies with 95% win rate when you're risking, $20 for every $1 you can potentially make. It just doesn't make sense for me in the long run. I much prefer trying to find credit spreads where the risk reward is as favorable as possible in my favor. And the only way to reliably do that is algorithmically across an entire portfolio of stocks with the same parameters on the strategies that you like so that you can compare it apples to apples. These are all based on default strategies for a bull put spread. 45 days out, we're using an aggressive profile, and I'm willing to risk a maximum of $2,500, which you can always customize based on your account size. And when you click on update, everything updates in real time. So for example, if someone likes to trade a shorter dated expiration and maybe you want to be something more balanced in terms of risk to reward, you can click on update and it will recalculate everything for you in real time. And now, as you can see, Lululemon still is at the top of the list. The second one is Adobe. As you can see, the risk to reward is not as strong when I take a more balanced profile, or if I take a conservative profile, it'll look even worse. But this is really where you choose what works for you in terms of how aggressive or how conservative you are with your strike selection of these types of strategies. So it's fully customized to each individual user. You don't have to just use the default settings that we have. Now, I generally recommend that most traders who are starting out, if you don't have a strong understanding of these strategies, stick to the default settings. The default settings are built for you for a specific reason because they have been researched and back tested millions of times across billions of trades to have relatively strong performance of these types of strategies. There's a reason that that those default parameters are there. But if you want to choose to make customizations to those parameters, you want to change it to more aggressive, less aggressive, shorter dated, longer dated, you have that choice at your fingertips to choose whatever makes sense for you. Click on update and we will always resort your entire list of securities from best to worst for any option strategy that you care about. Today, we're just covering, income strategies. But if you like to buy call options, if you like to buy debit spreads, this tool does it all. But I'm just showing you today, the income strategies, which is a very popular, I would say, way of trading options. I think that there are, generally speaking, more traders that prefer the income strategies when it comes to options. So I'm going to focus on those strategies today. So, so we're going to look at the buy list, or we look at bull put spreads. If, let's say, I'm looking at my sell list, meaning these are stocks that I'm bearish on, what I would do typically is I would look at bear call spreads. And now I can look at bear call spreads on my bearish list and find credit spreads that give me the highest profit potential on a bearish trade. So let's look at Wayfair here. As you can see, this stock has been in a very strong uptrend, right? But this uptrend is arguably potentially broken, right? You've got this what looks like a bit of a topping formation here that looks like it's starting to break here to the downside potentially. Relative strength is starting to weaken here. MACD has started to turn negative. It's got some of the signs of what could be a topping formation, right? So what this is saying is that out of all the stocks that are in my bearish list, and you can see there are 58 entries in here, the one that has the best risk reward for a bearish income options trade is Wayfair. And I can go down this list, and instead of having to go through 58 different names, I'm really only going through the top 3, 4, 5, because I'll eventually find a trade that I really like within that top 3 or 4 or 5. And I know that I have exhausted the entire list, and I've looked through every single options chain, and I know that I'm trading the option strategy with the best risk to reward. And that is why we built this tool, because as a trader, I used to it's not waste, but I used to spend a lot of time researching, a list of stocks, pulling up the options chain, figuring out, best practices, which strikes I would choose, what expirations I choose, what risk reward looks like. And I would do it manually one by one until I found one where the risk reward looked good enough for me to trade. But I never knew for a fact if I was trading the one with the best risk reward. But that is what this tool changes. And that's why it's a tool that I use nearly every single day in my trading, because it just automates all the work that I typically would do as an option strategist in under 2 seconds. And now I always know that I'm trading the strategy with the best risk reward in my favor for the list of stocks that I care about, or the list of stocks that I want to screen for that day. And then lastly, what I want to cover are iron condors. Iron condors are basically just 2 credit spreads, a put credit spread and a call credit spread combined into one. It's a more of a neutral strategy. It's a more strategy that's it's neutral, and it's trying to take advantage of stocks that have high implied volatility. This is really a more advanced strategy, but this is really where this tool does that work for you as well. Let's look at maybe let's go back to my buy list real quick. Whoops, I chose the wrong one. Let's go to my buy list, and we're going to choose Iron Condor. I'm going to choose the default settings to start with, but actually, you know what? Let's do 7 days, because we're talking about weekly income, right? Let's try to find the trades that give me the highest weekly income potential with the best risk reward on this list of stocks. So what I do is I basically select the Iron Condor, select 70 days. And then, as you can see, Target, interestingly enough, has the most attractive risk to reward. For every $1 I can potentially make, I'm only risking $1.20 on the back of it. So just to kind of help you understand, this expires in 3 days. So this Friday, right? This is very short dated. I'm looking at selling the 90, 92, 95, 97 when the stock's currently trading at 93. And the break-even price is 91.10 and 95.90, right? So basically what I'm saying is that if by this Friday, Target is above 91.10 and below 95.90, I'm going to be profitable on this trade. And if it exceeds that, right, if it's outside of that range, for every $1 I can potentially make, I'll risk $1.20. And the idea is that there's a relatively small chance that the stock will be outside of that range. So I'm happy to risk $1.20 to try to make $1 because I have a much higher chance that I'll make that dollar than I'm going to lose that $1.20. Because the stock has to move a pretty significant amount between now and that Friday expiration, which is just a few days away. And if we zoom in here, let's just kind of maybe zoom in a little bit and show you kind of what those prices look like. This doesn't give me enough. Let's look maybe 6 months out. All right, so 91 is basically here and 96 is basically here. We're basically saying on Friday, if the stock is between these two levels, I'll make $1. If it's outside of those two levels, I can lose up to $1.20. So what we're trying to find is where the risk reward is most favorable for these types of neutral strategies. So again, more complex trade, more advanced trade. But as you can see, if I'm trading a iron condor on these listed stocks, this is a very wide gamut in terms of risk reward. The best one gives me a 1 to 1.2 in terms of risk reward. The worst one, for every $1 I can make, I'm going to lose $3.50 if I'm wrong on this trade. Let's look at Honeywell, right? Actually, it looks like this is. Let's look at maybe this is not. Let's look at GoDaddy. It's trading at 127, right? This is saying that if it's outside of 124 or 130, for every $1 I can potentially make, I'm going to lose $2.50. So 124, 130, 131. So 124, 131. So very similar trade, right? Let's just kind of zoom in a little bit. 121, which is sort of down here. It's actually even a little bit below where we have a screen for, right? 121, I think it was like 130. What was the numbers again? 121, 120, sorry, 124 and 130. 124 is down here and 131 is up here, right? So if by Friday the stock stays between these two levels, I'll make $1. But if it goes outside of those levels, I'm going to lose $3.50. So think about that, right? So like, what were the two examples that I showed you? Target. For every $1 I can potentially make, I'm losing 1.2. I'm risking $1.2. That's a really good risk to reward ratio. On the opposite end of the spectrum, for every $1 I can make, I can potentially lose $2.50. That's twice as worse in terms of risk reward. And there's really nothing different from Target versus GoDaddy. It's just that the option premiums have very different risk reward profiles. You wouldn't have possibly known which one's best, which one's worse, unless you had looked at every single one and ranked it top to bottom. And if you were doing that manually, that could take you hours. We're doing that in real time so that you are always finding the options opportunity that has the best risk reward in your favor every single time in under 2 seconds. And just to kind of help you better understand, right? If let's say this is one of the strategies that you actually want to take, you can just click on expand and it will give you the details of that specific strategy so that you can enter into your brokerage firm. So we're providing you with everything that you need to identify the strategy, understand the risk to reward, have all of the metrics that you typically need to make a decision, risk to reward, maximum risk, maximum reward, whether there's an earnings coming up, the IV rank for those of you that are a little bit more advanced in terms of trading, that you want to look at kind of the implied volatility of an option, what the break-even prices are, how much premium you're collecting, what expiration date, what strike price, even a plain English explanation of the strategy, volume and open interest information for each strike so that you can make sure the liquidity is there, the bid ask so you can see how tight the bid ask spreads are, everything. And we even have a liquidity ranking on each strategy so that you can get a sense for how liquid the options are. So for example, if you look at Trade Desk here, it's telling you very liquid. Salesforce, these are all very liquid stocks, but let's look at maybe GoDaddy. GoDaddy, as you can see, is somewhat liquid, right? So these are things that you might want to know when you're deciding which option strategy you want to trade, in helping you better understand, the execution quality of these particular stocks, right? So when you're using any of our pre-built scans, they're always going to be relatively liquid securities. But if you're using your own scans, right, it could be a varying list of stocks that you have in there. So it gives you an understanding of the options liquidity as well. When you're sorting through this, so that you don't spend too much time wasting your time looking at, option strategies on stocks that aren't very liquid, right? Because if the options aren't very liquid, you're going to find a good trade, you go to enter it, and that order is just going to sit there. It's not going to get filled, certainly not at the midpoint. You're going to really have to work your order to get filled. So our liquidity indicator gives you a good sense for how hard do you have to work to try to get that order filled, or how much you might have to chase that order in order to get filled. So with things that are liquid, you can place an order at the midpoint and know that, you'll likely get filled pretty quickly. But with some things less liquid, you're going to have to work a little harder on getting that order filled. So that covers what I wanted to share with you here today. As you can see, this tool is incredibly powerful in helping you always identify the best, highest yielding income opportunities for your option strategies. And I think for most traders, it really unlocks options as an income generating strategy for traders, because historically you just couldn't do this work manually. So you always just kind of maybe found a good strategy, but you never knew that you were finding the best strategy. This ensures that every single time you go looking for an options income strategy, you are identifying the best possible strategy or the highest yielding income opportunity, so that and it does it in under 2 seconds, so that you are always confident in the trades that you're making, that you are selecting the best possible opportunities in the market. And just honestly reducing the amount of time it takes to research trades. It took me hours every single day to find these types of opportunities. Now I can do it in under 2 seconds, which is why my StockCharts account is one of my most used tools for finding options trades. I've spent a lot of time building custom scans inside of StockCharts so that I have all of my technical analysis part automated using StockCharts. So basically what I do is I go to scan and alerts, I go to advanced scan workbench, I build my scans. They have these really fantastic tools so that you can easily just, add different criterias, piece them together, run a scan. And then what you can do is you can schedule them to populate a chart list. So for example, I have all of these scans that I've built. So, and every single day at either the close or the open, it will run and it will automatically populate that chart list. So whenever I'm looking at any chart list inside of StockCharts, that I know is going to be the freshest symbols from earlier today, right? So whenever I'm looking for different scans, outperformance, underperformance, undervalued, overvalued, all of this stuff, my chart lists are always updated every single day with fresh symbols. And that is how you get maximum value for this add-on, because you're always going to be looking at stocks that you care about, and we're helping you find the best option strategies on the stocks that you care about with StockCharts.com. So, we've invested a lot of resources in building these tools so that you can have access to it. And I hope that you guys are able to take advantage of it, because as an option strategist, I've been doing this for nearly 18 years. This is the single most important tool in my toolbox every single day to help me find option strategies. Whether I'm looking for income generating strategies or I'm looking to buy some options, I always know that I'm identifying the cheapest options to buy and the maximum yield to sell when I'm looking at income option strategies. With that covers what I wanted to share with you here today. What I'll do is I'll open this up for Q&A. There is a chat window, but please type your questions into the Q&A window, not the chat window, and I will try to answer all of your questions through the Q&A window, okay? So, the chat window is open, but please, if you have a question, post your questions in the Q&A window, and I will answer your questions there. So with regards to the subscription, the $40 a month, it is a monthly subscription. There's no long-term commitments. It's just $40 a month. You can cancel at any time. So this is a separate subscription from OptionsPlay. So it is completely separate from your OptionsPlay subscription. Can you explain the OptionsPlay Score? Yeah, the OptionsPlay Score is a risk-to-reward metric that we have built to help you compare different option strategies side by side. So, for example, the options play score here, and the options play score is typically more useful for when you're buying options. It basically gives you a sense for, out of all of these stocks, right? There are a couple of dozen stocks here, which have the cheapest call options and which have the most expensive call options. Because if you're buying call options, what you pay is how much the stock has to move by before you can break even. So the more you pay, the less likely that you're going to turn a profit on that trade. So it's really important to understand, how expensive are the call options that you buy. So when you have an options play score that's green, that means that the options are below average in terms of cost, so that your probability of profit on that particular trade is higher than average. Anything in yellow means that you're pretty much on average in terms of the cost of that option. And anything in red means that the options are really expensive, meaning it's, generally speaking, it would take a much bigger move than normal in order for you to turn a profit. So this way you are basically ranked from top to bottom. So this is my bullish trend following list, right? So let's say I want to buy a call option on any of these stocks. Well, XLP and Nokia have the cheapest options to buy. 3M and Marathon Digital have the most expensive options to buy. It gives you a good sense for how expensive or cheap something is when you're buying that option. There are a lot of tutorials on this tool, but they are available to paid members. So when you go to your articles and videos, you will see my name there and all of the previous webinars that we have done. And I have a lot on them, of how to find counter trend options, how to grow your options trading account, high probability counter trend setups. Some of these, a lot of these videos are available to you when you sign up for your OptionsPlay account. Are all of these pre-sorted lists updated daily? Yes, they are updated daily. If you're building your own scans, you can have them update up to twice a day at the open and at the close. I generally do it once a day for the most part. Can you trade 0 days to expiration options? You could, but that's not really what the tool was built for. And the reason for that is because, this is for screening a large number of securities at once. When you're trading 0 days to expiration, you're trading the same security day in and day out. You don't really need a tool like this to scan for which symbol gives you the best risk reward, because there's really only a handful of symbols and they're virtually identical, whether you're trading SPY or SPX or QQQ. One is not going to give you, any real advantage in terms of edge, trading one product over the other, right? It's really a matter of like what your directional view on the day is for trading those 0 days to expiration options. So this tool is not as useful if you are strictly only trading 0 days to expiration options. What delta do you use for choosing the strike price for various strategies? So every single strategy has a different setting for the conservative, optimal, and advanced, right? Aggressive. So for example, if we're looking at long calls, right? So conservative, balanced, and aggressive, those are referring to deltas. Each strategy has their own parameter for deltas, right? And it varies from strategy to strategy. If you want to find out specific ones, you can email us and we can get you the answers for any specific strategies that you're looking for. Is there a better time of day to run the tool? I generally tend to find that most traders will run it, after the open is always a good time, because that's really where activity is highest. That's really where you want to generally, potentially put on new trades, is at the beginning of the day. But also, after the day closes, a lot of times, that's really where you can maybe sometimes slow down, take a breather from kind of the fast moving markets, and really kind of take the time and do some real deep research on stocks that you want to buy or sell, and kind of do the homework, if you will, and know by the next day what you really want to potentially trade. Is just that the only downside to that is sometimes by the time the market opens up the next day, what you research is maybe no longer applicable because the stock has moved 5% at the open or something like that. So there's the risk that, there's sort of the small downside risk of that. But, I always like actually doing things at the end of the day because I'm not distracted. I have a much clearer head and I can kind of spend the time to really do the research properly on each individual stock versus sometimes in the middle of the day, things get busy, things are fast moving and you may not do all the research and you're kind of chasing things sometimes. So short strangles is not a strategy that we currently support here, but that is something that we can easily add. But I will say, if you like short strangles, I would use the iron condor scan and just ignore the outer wings, right? Because the iron condor effectively is, so for example, the two middle strikes is the strangle that we would trade, right? So the 30-day, on CrowdStrike, you'd sell the 500, 560. For Valero, you'd sell the 170, 185. You just ignore the outer strikes. That's a very advanced strategy. It's a strategy that I only suggest that investors with at least $1 million plus in their portfolio to even consider taking on, and usually even a little bit more than that, because it's a strategy that requires you to really spread out your risk across a large number of trades. And the only way to do that, selling strangles, is if you have a very large portfolio. It's the tool is absolutely capable of helping you do that, do the short strangle. But the vast majority of traders, I would recommend selling the iron condor instead of the strangle, so that you don't take on the unlimited risk and the capital requirements are reduced by, in most cases, 90 to 95% in terms of the margin requirement to sell an iron condor versus a short strangle. So even though you're collecting less income, it requires 90 to 95% less capital. So you're actually having a much stronger risk reward or return on investment, rather, because it takes so much less capital to sell an iron condor than it does to sell a strangle. Okay, with that covers what I wanted to share with you here today. I really hope that this is helpful in giving you a better understanding of the OptionsPlay tool and what it's capable of. And more importantly, I'm hoping that I showed you how you can cover the cost of your first month, if not multiple months, of OptionsPlay using your first cover call strategy using this tool. So I posted the link here again on the chat window if you want to subscribe, or you can point your phone to that QR code and that will take you to the subscription page to sign up for your first month of OptionsPlay at StockCharts.com. With that, thank you so much. I hope you guys have a great trading day, and I'll see you guys here next time.